here are the steps you need to be aware of. LLC error number one, tax error number one, using the wrong tax form. See, the whole thing here is that unlike the individual tax return Form 1040, business tax returns vary based on your legal structure. Okay, and if you're an LLC, the question is you need to ask yourself, how am I going to file my taxes? I mean, you are an LLC, but the kind of election you have with the IRS could be different. So if you are an LLC and you don't do anything, by default, you will actually file Form 1040, your regular form, and Schedule C. You have to actually put your profits and losses on your Schedule C. That's by default if you do nothing. If you are a single member LLC, that is. If you are a multi-member LLC and you do nothing, by default, the IRS will treat you as a partnership, and the IRS will require you to actually file Form 1065. Okay, so, and you have to file, along with Form 1065, you need to send Schedule K1 to all the members of the LLC. So it's really important to use the right tax form, because otherwise this could trigger an IRS audit. If you are a multi-member LLC and you elect to file as a corporation, as an S corporation, then you need to file Form 1120S with the accompanying Schedule K1. If you elect to file, let's say you elect to file as a C corporation, then you need to file Form 1120. One thing I want to say here is that the election has to happen through a form. So we have 2553 if you want to elect as corporation, and for C corporation there's another form that's different. I'm kind of blanking on that right now, but the form is different. It's not 2553, it's another form. So the bottom line is what? The bottom line is you have to be very careful about following the kind of form the IRS is expecting you to actually file. And forgetting all your tax obligation is another mistake that could trigger an IRS audit. Okay, so I want you to think about taking into account your property tax, payroll, local taxes, excise taxes, and a lot of things into account. So when you file taxes, make sure that you are actually including all taxes, not only at the federal level, but also at the state level. Because if you have problem at the state level, because states do talk to the federal anyway. So if there are problems if you have problems with state authorities when it comes to taxes, chances are you might have the same thing at the federal level. So please make sure that you comply dually, you comply jointly, you comply at the federal level, but also at the state level. Mistake number one, using the wrong tax form. Mistake number two, failing to file by the due date. By the way, welcome back to the channel. Really appreciate having you here. We're having a conversation about LLC tax errors that trigger IRS audits that you must avoid. So failing to file by the due date. One of the top tax return errors is filing your tax return late. And whenever something is late, you know there's a penalty coming your way, right? So really, this is something you really need to avoid. I really want you to really do everything that is in your power today to avoid this faux pas. And what you want to do is you want to keep your due date at the front of your mind. So the cool thing is there are a lot of ways nowadays where you can just have reminders either through apps or electronically. You can have like a reminder on your phone. You know, you can actually set something on your computer so you have a clear idea when tax forms are due. Okay, so your business tax due date depends on the form you are filing. Remember, simply because you're an LLC doesn't mean that you are filing Form 1040, 1065, 1120S, or 1120. It depends on the election that you have made with the IRS or the lack of an election. Okay, so March 15th is the deadline for Form 1065 and Schedule K1. That's if you are filing as a partnership. You are a multi-member LLC. You have not elected otherwise, so the IRS is treating you by default as a partnership. So March 15th, Form 1065 and Schedule K1. March 15th for Form 1120S if you're filing as an S corporation. April 15th for Schedule C, but also for Form 1120. So that's for corporations that end the year on December 31st. Okay, so in general, what I want to say here is that the 15th day of the fourth month after the end of your tax year, that's for Form 1120. Okay, and the 15th day of the third month after the end of your tax year, that's for Form 1120S. And if you need more time, this is something that's really important. If you need more time, you can file a business tax extension. And if you don't have enough money to pay your business taxes, you can apply for a payment arrangement with the IRS. Anything you do, make sure that you communicate with the agency. Do not ghost them. Okay, it's important. And one thing I also want to say, so even if you cannot afford to pay your taxes immediately, so you should at least file, always file. And if you need an extension, submit, as I just said, you want to submit form 4868 for sole proprietors, or form 7004 for all other kinds of business entities. Mistake number 3, not keeping records throughout the year. By the way, I want to remind everybody of today's topic. We're having a conversation about LLC tax errors that always trigger IRS audits and penalties. So not keeping records throughout the year is a biggie. So how do you actually keep your records throughout the year? It's very important. Are you organized? Are you all over the place? What do you have in place? Do you even have a system in place to organize your records? Boss, talk to me about that. See, the whole thing is you have a business to run, and your business generates lots of paperwork, and you got to have a system in place to actually do everything to make sure that you are able, come year end, when come tax time, you're able to substantiate any claim, any deduction that you have on your tax return. This is really important. And what we have actually seen in our experience for the last 25 to 30 years is a lot easier to actually have things electronically. Nowadays, everything is moved onto the cloud. So it's just a lot easier to actually have a folder, have a shared drive where you just dump all your business records throughout the year. So come year end, you just go to that particular shared drive and you get access to all the data there. And you can even categorize records by the function or by the process. It can be sales, it can be purchases, it can be general expenses, it can be payroll. So you can actually categorize all the folders so that come year end, it's a lot easier for your accountant or for yourself to go into those folders and retrieve the information that you need. It's really important. So when we talk about organization in general, that's the kind of mechanism I want you to follow. Okay, and even better, if you use accounting software such as QuickBooks, Xero, Wave, Expensify, and whatnot, those software tools allow you to actually categorize your expenses even further. So bottom line is you need to keep your records throughout the year. Don't be in a situation where you're telling the IRS, listen, I'm actually claiming this amount, but you have no idea, or you have no backup, and you have no information, no record to back up that claim or that expense. So this is really important. And another thing you have to do, you also have to think about, is that if you were to outsource your tax preparation, your company's tax filing to a CPA, an EA, or tax attorney, you constantly want to make sure that you furnish to that expert all the data that is important for them to do a proper filing. They need records anyway. Mistake number 4, incorrectly entering information. This is a biggie, another biggie here. So when you are writing or typing numbers and letters, you could accidentally misenter information, right? So we're talking about not providing the right information to the IRS. We're speaking about having, putting the right EIN, for example, putting the right numbers, the right amounts, the right names, so on and so forth. And all of these things is simply because you are doing taxes yourself and you are kind of rushing things. In other words, you haven't planned. That's why we go back to what I said earlier. It's important to actually plan your taxes. You don't want to wait until tax time to actually start planning stuff. This is an ongoing thing. And when we talk about best practices when it comes to taxes, you got to have a mechanism in place. You got to have controls in place at the LLC level to make sure that information is recorded throughout the year and the information is entered properly. Okay, and same thing if your tax expert enters information wrongly, it's maybe because he or she was under pressure. And this is why, again, we're going back to what I said earlier, you want to organize. So when we talk about entering information wrongly, we're not just talking about numbers and amounts. We're talking about incorrectly classifying staff also. So incorrectly classifying staff is a pretty easy trap to fall into. Most companies, for example, hire independent contractors in order to save money in tax season. However, if your company's independent contractors are expected to work certain hours or were forced to work on site, they may actually qualify as regular employees. And ensure that you understand the IRS stipulations for independent contractors, or you can end up with severe tax penalties when tax season rolls around again. Okay, so those are really important. And also pay attention to the limitations that you can have on deductions. Okay, when we talk about entertainment, when we talk about meals, when we talk about charitable donations, when we speak about capital gains taxes, when we talk about capital gains, capital losses, there are limitations. There are inherent limitations based on each criterion that you need to abide by. But again, if you're doing your taxes yourself, those are things you need to think about. But if you are outsourcing the whole process to a third party, they should know those things. Mistake number 5, forgetting to include supporting documents. This is another big one. By the way, I want to remind everybody of today's topic. We're having a conversation about LLC tax errors that always trigger IRS audits and penalties. So let's talk about that forgetfulness, that oblivion when it comes to the supporting documents. You know, if you are claiming tax credits or deductions, do not forget to attach the schedules and forms to prove you can claim them, right? Because every let's say every schedule, every deduction or tax credit requires so you need to substantiate your claim, and so they do require some substantiation. And it's really important for you to have the right forms too, okay? Because the IRS does not like when taxpayers are sort of like reckless. No, don't just claim something and you can't prove it. No, what's up with that? So you really don't want to do this. Let me give you an example. You want to attach Form 8829, for example, to Schedule C if you are claiming the home office deduction. That way the IRS understands, okay, this person has done his or her research and knows what he or she is talking about. Okay, so you have more credibility. And if you forget to include supporting documents, this could actually lead to the IRS second guessing your claims, which is why it's also important when filing your tax return to attach the appropriate documentation. Okay, and also it's really important to understand that this is mistake number 6, making payment mistakes. So when you are mailing a check that is not fully filled out, underpaying estimated taxes, or sending the wrong amount to the IRS, the possibility of payment mistake is out there. But again, all of these things start if you have not prepared. If you are just rushing at the last minute to actually comply with your tax obligations. That's why we want to insist on the fact that it's important to plan things ahead. Okay, follow the IRS instructions for making estimated tax payments and filling out checks, or you can opt to use the IRS electronic federal tax payment system, which is our preferred option. The EFTPS, it's faster, it is secure, it is direct. So, and always you want to triple check or quadruple check that the amount you are sending to the IRS matches your tax payment liability. This is really important. Mistake number 7, not separating business and personal expenses. This is something that a lot of folks do, this is the big mistake that a lot of folks do. At a minimum, one thing I want you to do here is you want to segregate your personal affairs from your business affairs at a minimum. And I don't care how you do it, but you have to do it. And one way of doing it is by opening a business bank account, a business checking account, and also by having a business credit card if you do qualify for one. That way you can just park all your business expenses or your business items or your business transactions in the business bank account, or you can charge all those business related expenses on the business credit card. So you actually segregate, you separate your business affairs from your personal affairs. This is important because if you have an LLC and you want your personal assets to be preserved in a court decision, make sure that you actually are not able, you make sure that you are given the appearance that you are indeed a separate entity, that your business is a separate entity from yourself. Mistake number 8, deducting startup costs incorrectly. So new businesses in their first year of tax preparation are extra susceptible to tax mistakes. Owners commonly overestimate how much of their startup costs are deductible. Okay, so despite misconceptions, business owners cannot deduct all startup expenses right off the bat. First, you have to make a sale. Then those expenses are deducted over the course of the next 15 years. 15 years. Okay, now there is a caveat, however. The IRS will allow up to $10,000 in deductions from startup costs in your first year. So that's $5,000 for startup and $5,000 in organizational cost if your total expenses did not exceed $50,000. So please I want you to write down those numbers. If startup expenditures were more than $50,000, but less than $55,000, you can still receive your deduction, but it will be reduced by the dollar amount exceeded beyond $50,000. So those are subtle criteria you need to be aware of. So this is why we always say, listen, you want to contact an experienced CPA, a tax attorney, an enrolled agent, or a tax planner in general to kind of help you navigate those subtleties. Mistake number 9, mixing business and personal expenditures. This kind of goes back to what I said earlier about actually not separating your business and personal expenses. But the thing I want to say here is that the difference is even bigger. Let's say you are using a car and you're using your car for business purposes, but also personal purposes. Or let's say you are actually using your phone. You are using the same phone, the same smartphone for your business and personal transactions. Let's say you are using a computer, a laptop, a tablet for both business and personal reasons. So this is the kind of, so earlier I was speaking to you about the expenses. Now I'm talking about the assets, the underlying assets. So this is really important because those assets, when you use them, you do create an expense. But it's important to understand that you gotta, when we talk about assets, we're not just talking about income statements anymore. We're talking about income statement and balance sheet. So you have to be very careful here. But our advice, as I said earlier, remains the same here. You want to segregate, you want to separate, you want to differentiate your business affairs from your personal affairs, your business assets from your personal assets. So if you have a car and you cannot get a car for your business, and you want to use your personal car for your business, make sure that you keep proper records so that the IRS knows exactly how much you spend for, how much you drive the car for business purposes and how much you drive for something else. Same thing with the computer and for other stuff. Mistake number 10 is forgetting the value of small items. So here, basically the thing here is that make sure that you always keep records, make sure that you have the right amount, make sure that you are able to substantiate whatever you claim on your tax return, even if it's a small item. Don't ever believe that it is so small the IRS is not going to pay attention to it. They will pay attention to it. Things like business magazine subscription, or even recipe items, or let's say uniforms. You know, those are little things, but if the IRS if they want to start digging and they realize that you are actually just making up numbers, you can be in trouble. So it's all about making sure that you are able to keep the value of small items. You're able to accurately find that value if needs be. Really important. Thank you so much for your attention. I really appreciate it. So those are the tax 10 errors. Those are the LLC tax errors that always trigger IRS audits and penalties. So using the wrong tax form, failing to file by the due date, not keeping records throughout the year, incorrectly entering information, forgetting to include supporting documents, making payments mistakes, not separating business and personal expenses, deducting startup costs incorrectly, mixing businesses and personal expenditures, and last but not the least, forgetting value of small items. Thank you. I'll see you next time. But until then, remember, stay marvelous.